And today is April 1st. This is your market update. And we have a bloody red day out there today. And if you look at the chart here, you'll see that we haven't had a lot of green in the last several weeks. The last green we had was at the beginning of March, and that was the end of this period of green, which didn't really excite anybody. It was a short uptrend, and it topped out very quickly, and then the market has not been able to make a top in there ever since. In fact, if you look at this trend line, this is marking the tops. It hit the top here and hasn't been able to come back and test it. Now it still may turn around. So let's analyze the different issues and indicators on our chart. First of all, our basic trend you can see is now rolling over. It's into the down area. It's not very hard down, but right now it's still decidedly down. The direct trend is now below this line. So you see this red bar right here, which is indicating that the markets are now in the red. This parabolic SAR, which is stop and reverse, or support and resistance, depending on how you like to call it. I like stop and reverse, but it's right now it's showing negative. You can see this little dot right here, and these are support, and that is resistance. So now we have a resistance in place. So one red arrow there, another red arrow here when it closed below that line, and the third red arrow here on the Genius indicator, which to us is one of the most important indicators out there, and it's showing that that we basically went bearish 5 or 6 days ago, and even though we had this spike up, it has not been a very bullish scenario. So now we've got these trend lines here to contend with. This is the shorter term trend line. You can see it across the bottoms here, and this market looks like it wants to threaten to test that trend line. If it tests it and doesn't bounce off light volume, and it closes under it, well, and especially if it does it on heavy volume, now we're going to look for this trend line to be tested, and that's a significant drop. That's that's 100+ points on the New York Stock Exchange. That's pretty, a couple of percent, and so that's a significant drop. If you felt this drop today, you know that there could be more coming, and it's not very good if you're on the long side. So today it looks like it's stabilizing. The market was down a couple hundred points, the Dow, and now it's down about 65, and it's blue. It was just red when we started recording. So it's just trying to stabilize it a little bit higher than it closed yesterday. Nonetheless, it is significantly painful. There's a lot of stocks. There's a lot of red on the screen, a lot of stocks that are down. So let's see. Is there anything else that we need to analyze here? Well, first of all, notice we have a red condition again, following a very short yellow condition, following very short red, following yellow, following a red. So there has not been any green in sight in a while. And so that should tell you that there's a lot of stocks that are having trouble making highs, and the market in general is having trouble making highs. You should not be trying to be bullish in this market because the institutions are clearly selling. And if they're selling, that means you want to be selling. You do not want to be trying to pick the bottoms or buy when they're selling. You want to be on the same side as the institutions. So red market today. Cash is a good thing if you could take your money off the table on some of those long positions. Get in cash. Wait for the sell in May to go away rule that's going to take effect next month, when all the traders essentially go to the Hamptons and enjoy their vacations and take all their money off the table. It looks like there's some selling going on, and we know that the Fed is talking about raising rates if the economy continues to go up. And historically, when the Fed raises rates, the stock market goes down. So we are getting ready for that. Right now, we play it day by day. The market is red. Either be short, be hedged a little bit if you want to be, but primarily you should try to be in cash and not try to pick these bottoms. Good luck.